quoting my friend Dave Collum, we started chatting offline, and he's like, "Grip and rip, let's go, let's do it."
Yeah, absolutely.
We'll figure it out. So, Larry, thanks for doing this, and interesting timing today. Did you got put in Twitter jail? Do you think, or you're locked
Yeah, I don't
out?
know. I don't know what happened. In the past, I've been hacked. I didn't click on any link. I wasn't hacked this time. I just got a message from them saying my account had been suspended due to suspicious activity. Click on this link and change your password. I did that. Of course, it wouldn't let me log in. I couldn't change my password. I sent a support request, and I got into kind of a circular to come back and say change your password again. Of course, I can't get in. So I don't know what the problem is. I don't know what the solution is. It has occurred to me in my conspiratorial mind from time to time that maybe the message I'm broadcasting is not something they want out there. I don't know. In fact, my last tweet was about how I didn't think there was a gold in Fort Knox. So and since over the weekend, Trump talked about he who has the gold makes the rules. That's probably not a tweet that they would view as a friendly tweet. So we'll see.
Yeah, I don't know what to make of all that. I was telling you, and people that listen to me know, when I had Marty Bent on, I took a clip from our conversation. It was just talking about the meme coins because it was right after the inauguration. It was talking about the Trump and Melania meme coins, and there was no profanity in the clip, nothing, and they restricted my visibility, which I didn't know that was a thing. But that means that you can't share, you can't reshare it, I can't send you the link. So my own post, I can't send you the link.
That's odd. That's very odd. And I was hoping Elon would be above and beyond all this stuff because we know the old Twitter did that, but that's not great.
Yeah, I didn't have, I use it. It's a great prospecting tool for me to connect with people. I mean, I wouldn't be talking to you right now if, had it not been for X. But I never had faith after this whole, when Trump got reelected. First of all, I never thought he would win, but it's becoming even more apparent to me right now, to more apparent now what this all is. And I've said this. I mean, I think this is the WEF 2.0.
Yeah, very possibly. I mean, I try and avoid politics as much as possible, and it's so hard to know what the truth is. It really is on both sides with all of this stuff. I'm a hardcore libertarian, Ron Paul guy from way back when. Yeah, it's like I look at a guy like Trump, and it's a complicated story, right? I mean, some of what he's doing is necessary and okay, but some of what he's doing is clumsy and probably not very well thought out. And some of it we won't really know until, we're 6 months or a year down the line how it all plays out because they put something into motion that's going to be hard to stop, and I think is going to be relatively ugly. I think that what Bessent did, and Bessent's smart enough to know he would do this when they went through the tariffs that they went through, was they threw a spanner into the works of the world economy, and the world economy is going to roll over and roll over hard, and that combined with a very overvalued stock market, it's going to make for a pretty ugly picture. And in a way, my sense is and as we know, Trump is very upset with Powell not printing, not dropping rates, et cetera. And I almost think that Bessent kind of took a different approach to it and just thought to himself, well, if we created the markets, we know that the Fed's third mandate will become relevant and they'll have to print. And so, again, that's the name of my book, The Big Print. I mean, it's coming because, they're in kind of an emerging market-like condition where, the stock market's going down. The bond market is also going down, which generally in the U.S. was not the case. The stock market and the bond market are supposed to be inverse. And the currency is going down. So you really only see these things in countries that are in kind of bad fiscal and financial shape. Never in the reserve currency of the world, but we're seeing it in our country and the reserve currency of the world. And so it's going to make for a pretty messy situation from what I can see.
What are your thoughts on Scott Bessent, Howard Lutnick, and the team that's been assembled in this administration in regards to Treasury,
Yeah.
crypto, what have you?
Well, I've never been a crypto guy. I'm a Bitcoin only guy, and I give Lutnick credit for understanding Bitcoin and being very pro Bitcoin. I don't quite know where he is on crypto. I don't like any of the crypto guys in the administration, but so be it. Besant himself, he's a very smart guy, obviously did very well as a hedge fund manager, understands global macro and how the markets work. That doesn't mean he's foolproof or, he can't make mistakes. And I think he might be underestimating just how large a bubble we have and just how hard it's going to be to correct it. I said in another podcast, it's very difficult to cure 50 years of mismanagement in one 4-year presidential term. And my great fear is that even, God himself couldn't fix this easily. And Trump, while talented, isn't God. And so, it's going to be kind of a mess. I think Lutnick and Navarro were a little bit ham-handed with this whole tariff thing. We could have maybe gone in that direction without dropping a nuclear bomb into the world economy. The way they made up the numbers for balancing, these overseas deficits. I mean, again, you do something that radical, and I think they would argue, hey, you had to do it. We got to break the glass to get the whole thing solved. I understand that point of view, and perhaps they're right. But I think the alternative view is, look, we got a big, fragile, interconnected world economy, and you start breaking glass, and you don't know what's going to happen. And the subsidiary effects could be quite traumatic, and we've seen some of that. I mean, all container freight to the West Coast has stopped. All shipments out of those ports have stopped. You've seen record decline in consumer confidence, record decline. Consumer confidence is worse now. It's been in 45 years. I mean, just plunged. You're seeing record declines in airline bookings from overseas. People don't want to visit the States. Again, I'm not criticizing Trump. I'm just saying, I'm just calling balls and strikes, looking at what they did and what's happening. And, I think the stock market, my personal view is the stock market's in a lot of trouble. What we saw was just the first leg down, and it got kind of hairy. And when it got hairy, they immediately reversed the tariffs and gave a 90-day reprieve. And that created the bounce that we were in until a few days ago. And now people are waking up and going, hey, 90 days maybe isn't enough. This is really a problem. We're in a full-fledged trade war. These tariffs look very much like the 1930s tariffs that Smoot-Hawley put in place, and that's not good for this economy. And so, earnings estimates are going to get revised lower, and overvalued stocks are going to very easily come in quite a bit. So, it's a messy situation, Michael.
This episode is brought to you by Vaulted. Launched by McIlvaney Financial Group, with Vaulted, I literally just tap a button and bam, I own physical gold stored in a professional vault. I can also take delivery at any time, extremely simple and less expensive than any other method. The do-it-yourself way to buy precious metals. Click on the promo link in the show notes or go to vaulted.blbvux.net/coffeeandamike. I mean, look at how easy this is. The Vaulted app on my phone, I can access it at any time. I was looking at the stock market as you were talking just now, and as we sit here, it's 11:13 a.m. Pacific time, April 21st. It was down almost 1,300 points. What is your definition of trouble in the stock market?
Well, I think anything more than a 20% decline from the top is, a 20% decline kind of defines a correction, and if it's less than that, usually the market finds a base at that 20% and then goes on to create higher highs. In the COVID example, it went down 32% before they panicked and brought in the money, the money printer and the guns to all the programs to try and arrest the decline. And, we'll be back. I mean, that 20% level is right around, I look at the S&P and I look at about 5,000 on the S&P as kind of the critical level. And we're at 5106 right now. I think when we were at the bottom on that April 7 day was the worst day. It didn't close, but we saw it trade through 5,000, to 4,800 or so. And so to me, if we take that out again, we could easily lose another 10%. At that point, you've got a market down 30% from the peak. Tax receipts are going to fall. Eventually companies are going to start to lay people off. And I think Bissett and Trump calculated correctly so that a lot of the people who voted for them don't own stocks. If you think about it, Bissett even said this in an interview with Tucker, the top 10% of the people own 84% of the stocks. So stock market going down does not necessarily hurt the average working person if they don't own stocks. And he emphasized, we're going to help Main Street. We're less concerned with Wall Street. The thing that they didn't say is that if Wall Street does poorly and the stock market goes down a lot, and everybody cuts back their spending. Another data point that was very interesting came out last month. 10% of the consumers in this country account for 50% of the spending. So the top 10% has been okay. And what's going to happen, in my view, is if the stock market goes down 30 or 40%, that top 10% is going to feel a lot poorer. And at the margin, they're not going to take the trip. They're not going to buy the car. They're not going to renovate the house. They're not going to do all the things they might have done when their retirement account was growing 20% a year. And now when they see the retirement account has taken a 40% hit, they're going to cut back. And those cutbacks then lead to, okay, well, Ford doesn't need to produce as many cars. So eventually the guy working on the assembly line gets furloughed for a while. So, the thing to keep in mind is it's all interconnected, and it's all happy games when things are going well and you got a bubbling economy and things are growing and the government's spending like crazy. But when that turns around, it can unwind just as fast. And if it was a real bubble, like I believe this was, I call it the everything bubble, then the unwind can be pretty messy, sadly. But I think that's what we have to look forward to for a while.
Plus, too, with the middle class, they have their 401ks, or state pension, federal pension, and watching it plummet. People that don't pay attention to this stuff, they don't understand, and they're just seeing their retirements just decrease. I mean, one of my concerns with all this is people are just going to, have the potential to go off the reservation.
Very possibly. I don't know about that, but it's certainly, certainly this kind of a thing historically has been extremely painful, and it's sad. It's sad to see it unfold, but it's what you get when you stoke the economy and you print 40% of the money in 2 years irresponsibly, the way they did, in the COVID crisis, sent out checks to businesses that didn't need them, and now, and then continued. I mean, so one could make an argument that, okay, COVID was a crisis. We needed to print money. We needed to help people out. The stimmy checks were a good thing. I can accept that. The businesses got way too much, in my view. But what should have happened after that is the government spending should have fallen. COVID took the spending level from in the 4.5 trillion range up to 6 or 7 trillion. I mean, it really grew spending, ran huge deficits, which they then monetized, which is how we got the money supply growth. And but once the crisis was over, you would have thought, well, the government will cut back. But I think the Biden administration and their desire to win the election and keep everything going, they just kept the foot to the pedal, the metal on spending. And so, the deficits keep getting larger. And, like Trump came along with Doge, and it's a good idea to cut spending. There's obviously a lot of fat in the government spending numbers. But, Elon was very unrealistic and irresponsible, in my view, when he said $2 trillion can be taken out of this budget easily. And there's just no way. Anyone who understands the budget knows that's not a true statement. And even he has now admitted they're going to be lucky to take 150 billion out of it in a year's time. And the deficit last year was 1.8 trillion. This year it's running at 2.3 to 2.4. So if it's 2 billion deficit, and we save 150 billion with Doge, it doesn't really move the needle that much. So, this is what leads to my earlier statement about, we're behaving like an emerging country. We're spending more than we're bringing in, and we're printing the money to do that. And, the outcome of that is, gold is making record highs every day, and Bitcoin made a record high in, I don't know, December, early January. It's backed off a little bit, but I suspect it'll make another record high later this year. So, and that's because those are two forms of money that the government cannot print. And gold is very good at smelling out future monetary debasement. Everyone who looks at gold looks at it and says, okay, I get it. These guys are going to print a ton of money. There's going to be more inflation in the future. Therefore, gold can't be printed. I want to own some of it.
Well, and this whole thing is set up like a superhero movie where people, when Trump got reelected and Doge and this team was put together, I had to take a step back, and I'm listening to some people, and I'm like, they're never going to cut spending, and they haven't. They've increased it.
Oh, yeah, that's right. I mean, the defense budget's going up. I mean, I was thinking, hey, at least maybe he'll get after defense, because I thought he was kind of anti-war. I thought maybe he'd have some success in the Ukraine. Doesn't appear like he's making a lot of progress there with Putin. Yeah, no, it's look. I mean, the whole feel good that half the country had when Trump won. My partner and I were talking about it. We were kind of like, this isn't going to last, because reality is going to set in. And there's just not a lot he could do. And there's certainly an argument that some of these things he's done have made it worse. But look, it is what it is. And like I say, I try to avoid the political side of it. I'd stick to the sound money side of it. And I know that on the monetary side, and this is why I wrote the book, we are at great risk of additional printing and monetary debasement. If you don't mind, I'll hawk the book. It's available on Amazon. And, it's just a case of mathematically, they have to print or else we'll have a very, very severe depression. So they will print, but right now, I guess the headlines are all full of, Trump wants to fire Powell, and Powell is standing firm and saying, you can't fire me. And so that is what it is. And I think Trump can't fire Powell. I think Powell can't be fired. But as I said earlier, if Bessent is able to drive the markets down far enough and the bond market becomes weak, then the Fed will pivot and will print, and they'll say the inflation's okay. We can live with the inflation we have. We have to print. We have to pivot. That's the premise of the book, and that's what I believe will happen. And that's what I think Bessent is driving them toward, by being so tough on these tariffs.
Yeah, I don't know if you follow Craig Fuller from FreightWaves on X.
Yeah, I know who he is. Yeah, he's got good stuff. Yeah.
He did a post, I don't know if it was this morning or yesterday, talking about the Trump administration. He's like, I never voted for supply chain. I'm paraphrasing here, but supply chain and logistics to get nuclear bombed within 100 days of office.
Yeah, no, that's exactly right. And I mean, some people think he can do no wrong, and other people think he's everything he does is wrong. And my view is a lot more nuanced. I mean, some of what he does is okay, or is policy. I mean, the notion that China has traded unfairly with us for a long time, that's not wrong. That's a true statement. The actions he's taken, they'll be debated for years, and we'll have to just see how they, where they come out. But, pushing back on China and their unfair trade policies, I'm okay with that. I think we should have done that a long time ago.
Do you think then, so they're intentionally devaluing the dollar,
Yeah.
And tell me if you agree or disagree, and that is to usher in this new system, whatever that system, whether a combination of gold, Bitcoin.
Yeah, that's a great point. That's something we hadn't actually talked about. I mean, one way to help make the situation better is the dollar's been overvalued because it's been the reserve currency, and we've managed to export our inflation to everybody else and live beyond our means. If we were to devalue the dollar substantially, the trade would get much more balanced and things would be much more normal. And so I think dollar devaluation, I mean, in fact, Bessent even said this, and Trump has said it, that they want dollar to remain the reserve currency, but that doesn't mean it has to be at the current price that it's at. And so I think they have a very conscious strategy of devaluing the dollar compared to other currencies, and maybe compared to gold, and maybe compared to Bitcoin. And there's even an argument that, with the Bitcoin strategic reserve, and one of the things Bessent said that really intrigued me, and then there was a tweet this weekend which intrigued me further. Last summer, Bessent said, the monetary system is unbalanced and it's not working properly. And I think he was referring to Triffin's dilemma and being the reserve currency and the problems that caused when it forces you to run a trade deficit. And it seems to me that we're going to need to restructure this at some point in the future, something akin to Bretton Woods, and that was the last monetary conference that they had in 1944. And if that happens, I want to be at the table. Boy, that's interesting. This guy kind of gets it, kind of knows something's got to be done, and maybe is trying to get us there. This weekend, Trump tweeted, he said, he who has the gold makes the rules. Well, I thought that was kind of interesting. I mean, is it possible they're thinking about taking us toward returning to a gold standard? Is it possible that and I think that would be a good step if they could do it. I think one of the things that would prevent them from doing is I don't think we have all the gold we claimed in Fort Knox. I think there's gold in Fort Knox. I just don't think all of it's still there. I think there was a portion of it which Johnson used. There's a lot of evidence to support this to help with the London gold pool in the 1960s. And so maybe some of the big gold imports that we're seeing in the United States are actually the government buying it to put it into Fort Knox. But these are just little clues, but it would not surprise me if, they are thinking about some kind of a monetary reset where gold plays a role. I can't guarantee it, and it's probably not likely, but I don't, these hints they're real. Dissent saying reset, Trump saying has the gold makes the rules. My personal view is that going back to gold would be better than fiat, but it would be far worse than going to Bitcoin. And the reason is that I think China and India and Russia and the Middle East, they have a lot of gold, a lot more than we have. And it would advantage them wealth-wise to go back to a gold standard. We have a lot more Bitcoin than anybody else, and we have a lot of the Bitcoin companies and miners operating here, and we have a lot of knowledge in the Bitcoin world. And Bitcoin is, in my opinion, a better form of gold. It's digital gold. It can't be diluted at all. Gold does get diluted. And so I'm with Michael Saylor. If we have gold, we should sell it and use it to buy Bitcoin. And that will put China at a disadvantage compared to us. So whether they're that forward thinking, I just don't know. I can't say. I mean, Loomis has proposed a bill where she said that, we should be buying Bitcoin. And originally I thought, oh, that'll never go anywhere. And yet, what I've heard recently is it's got a better chance of succeeding than a lot of people thought. So we'll just have to see.
What I think about, when they talk about the gold in Fort Knox, which is you don't even hear about auditing anymore. That was a hot button for a week, and then it's just gone.
Yeah, well, it's interesting they stopped that. I mean, Basant must have gotten read in. They were talking about auditing it and going to visit it, but now they've gotten very quiet about it. And my guess is he got read in on it, like, hey, dude, be quiet about this. We don't necessarily have it all. I don't know. Who knows?
It reminded me of the Geraldo Rivera Al Capone Vault episode
Yeah,
from
right.
way
Goes,
back
oh, there's
when.
nothing in it. Yeah, right.
I also think of the movie, if you ever saw the movie Dumb and Dumber, where they came across all that money, and then in the end they open up the briefcase and there's all these sticky notes for every dollar that's accounted for.
Yeah, exactly. Same idea.
One was 275,000 for a Lamborghini, and they're like, you might want to hang on to this one. Every dollar's been accounted for.
Yeah, yeah, exactly.
What do you think then? What is the future of the Federal Reserve in all this?
That's a great question. The book calls for actually ending the Federal Reserve. I mean, I think if we return, the Fed has always been anti-American and bad for Americans, and the book documents that in great detail. It allows the banks and the government to print money and dilute all the rest of our earnings and wealth. I love Jack Mallers when he says, no man should be able to print what another man has to work for. And, the fact of the matter is that, the Federal Reserve can print money and the rest of us have to work for it. And that really advantages the people who get the money first, the people who get the money cheaply. So I think we have to end the Fed. And chapter 22 of the book is called Policy Solutions, and it talks about ending the Fed. And if we did that, the government would have to balance its budget. There wouldn't be a way for deficit spending to occur. Now, I can just see and hear the cries of anguish and fear and terror, and coming from the Keynesians, is the stupidest idea they've ever heard. But the fact of the matter is that being on a sound money standard is a good thing. The founding fathers knew it, and from 1789 all the way to 1913, and arguably even until 1971, we were on some version, somewhat watered down in later years, of a sound money standard. And, the world kind of worked. I mean, and inflation, the book has a chart in the beginning that shows that inflation was relatively modest, with the exception of during war times, and wars are inflationary by definition because nobody's going to vote to, hold a war because it takes a lot of national income to do it. And nobody wants to pay the taxes. So, of course, the way they accomplish it is they just print the money and you pay the tax in the form of inflation tax. So,
Do you envision some type of global conflict in terms of kinetic that would
boy,
potentially?
I sure hope not. But when I see some of the way some people are behaving, and I think about how scary this is likely to get, it doesn't seem impossible. I mean, as what we're describing, I'm sure you're familiar with the term, your listeners are too, is something called a fourth turning, which is when a society kind of goes through a gut-wrenching change from an old system to a new system. And the last one was World War II, before that Civil War, before that the American Revolution. And we're in one of those right now, and the subject is money. And if you look at the last three of those, there was a war involved. And so, it's possible it could be kinetic. I mean, I think it would be sad if it did, and I think it would be bad for America if it did, because so much of what, if you study this deeply, you realize that a lot of what we use for weaponry and the things we need to fight a war, we actually buy from China. So And one of the under recognized or underestimated things right now is that there are a lot of things in America that we need rare earths that are mined in China for. They're almost not mined anywhere else. And China, in us pushing our tariffs up so high and them counteracting them, they just banned all export of rare earths to the United States. Well, that's going to have an impact. And there are going to be things that we need those rare earths for that we can now no longer make as a result of not having them. And so, yeah, I mean, it would be terribly sad if it became kinetic. And that's why, this is a very messy and complicated situation that would, in my view, requires real leadership, real intelligence to work your way through it. I mean, I don't think there's anybody in the world that likes war that wants to see a lot of people die. But, there are a lot of big blocks. There are blocks throughout the world, all of them have land and resources and people. And we've behaved as a bully. America has behaved as an empire-like bully for quite some time. And, other countries are now in a position where they don't necessarily have to put up with that, and they're pushing back. And so I think our best move would be to be much more accommodating and to try and talk with our enemies and decide where our mutual interests lie so that we don't get into a shooting war.
When did the fourth turning start, in your view?
Yeah, that's a great question. I mark it as 2008, Michael. I think that, when the GFC was a huge wake-up call for, the old system dying. I mean, the size of the bailout, the rapidity of it, the fact that the financial, system was literally right on the verge of collapsing, where the ATMs wouldn't work and the banks would all fail. That, to me, that signaled the beginning. These things typically last 20 to 30 years. So 20 years from '08 puts you at 2028, 3 years from now. 30 years puts you at 3038. I don't think we'll go that long. I suspect this thing will get wrapped up in the next 6 years, 7 years, somewhere in the early 30s. And by this thing being wrapped up, what I mean is I suspect we will transition to a newer, sounder money-based monetary system, not because anybody knows you need it right now or because they want to do it or because leadership is intelligent enough to do it, although Besant might be, but more because at some point the existing system is going to continue to fail and we're going to have the worst of both worlds, which is we're going to have a real economic downturn and it's going to be inflationary. So you want to really, I mean, you piss American people off when they have a downturn because they lose their jobs. But if they lose their jobs and you have inflation, so the expense of everything is going up, that's like a double whammy. And at that point in time, I think what's going to happen is there's going to be a groundswell movement that, the money is broken. We got to fix this. And in fact, that's why I wrote the book, because I want, when those conditions appear, I'd like to have a large enough piece of America understand that the reason for those conditions appearing is that we're on this broken Keynesian fiat money train. And the only way to fix that is to get off it and return to sound money. And now, don't get me wrong, that getting off it's going to be one time very painful with really high inflation. One time. But my view is one time really painful high inflation, then followed by no inflation because we're back on sound money. People would live with it versus kind of just bleeding to death every year as inflation gets higher and higher and higher. So, I think we'll get there, but it's going to take time, to have enough of the, I mean, like if today, for example, if Trump and Besant came out, and say, hey, Keynesians are wrong, money system's broken, we're returning to a gold standard, I think everyone would look at them like they're crazy. And there's no way they'd be able to get it done. But I think if a couple of years from now, things are really rough, inflation is really high, the monetary system is clearly broken, that conversation can occur. And hopefully if enough people have read my book, they're going to stand up and raise their hand and say, this is right, we got to go back to sound money. And they're going to vote for people who want to go back to sound money. And we will, and that's the optimistic part. I mean, the book's got two parts, as you know. Part one is the problem. I've kind of detailed and described how we got to where we are right now, why it's all broken, and how it slowly but surely just kept getting worse and worse, and now it's culminating. And then the second part is the solution, which is optimistic and very positive. I mean, if we return, especially if we can avoid the kinetic part, Michael, if we can return to a sound money system, things will get much better, very quickly, and it will be fair. I had a conversation with a guy, a podcaster who grew up in Argentina in 1991. He was a teenager, parents had get paid, they'd race out to the supermarket to buy the food because they knew it cost more in a week. And then eventually the currency failed, and it was quite tough for a long time. For a while, nobody had anything, any money, any food. But then what they did is they re-dollarized. They went to the dollar, which wasn't perfect, but it was much sounder than their currency. And he said it was amazing how quickly everything reorganized. And within 6 months to a year, things were fine again. We were a thriving economy. And so what's broken here is the money. What needs to be repaired is the money. And when we repair the money, things will get better. I mean, that's just how it works.
Do you see us moving towards a model similar to, say, China?
Well, no. I mean, I certainly don't support communism, and I don't necessarily support state capitalism either. I mean, I would prefer we move more towards a model like Switzerland, where kind of a libertarian and the power gets distributed to the cantons and the cities and the states, and just push it down as much as possible. I think national and federal governments are dangerous because they can get you, they can take you toward war. Um, you know, and I think that's the flaw in China's system, by the way. I mean, I think as this pain begins to get meted out through this tough world economy in the future, they've got a lot of people there who've seen their lifestyle get a lot better. They're hoping that will continue, and if it suddenly doesn't, you might see a real pushback on the Communist Party. Um, it's interesting. I mean, the Communist Party does have the advantage of it's a lot easier to plan and direct and lay down laws, when you're controlling everything, when it's not a democracy. And from a competitive point of view, in financial and economic terms, having one central part of control, if you do intelligent things, it's worked for them, right? They've created enormous wealth with their manufacturing growth. Now they've done it at the expense of, being a mercantilist and suppressing wages and giving their people no freedoms, but they have created one heck of an economy. So,
Well, and also with that, it's how much have they advanced both militarily and technology wise ahead of the United States?
yeah, and that's unclear. I mean, I think they have great technology. I think we have great technology too. I don't know about their military. I think, they still don't spend nearly what we spend or waste on our military. I do worry. I do worry though. I mean, the thing I mentioned earlier, that we get a lot of the things we need, that our military needs, we get them from China. Well, that almost makes a war with them unthinkable, right? Because if they were to cut us off of those things, we'd be severely disadvantaged. I mean, I think the good news is, from what I can see, I don't think they necessarily have, I think they just want to be respected and have a solid place in the world. I'm not sure they want to come and invade America. I don't think that's really part of what they're after. Taiwan, maybe different. Maybe they do want to invade Taiwan, but I'm not sure that they have, worldwide domination ambitions. But um, it's certainly concerning that we have allowed ourselves to get into the position that we're in right now.
Yeah, I never took seriously the idea of China wanting to invade the United States because you look back on the history of them, that's just not what they do. They don't do that.
No. Well, go back to Genghis Khan. There's a little bit of that, but yeah, I mean, it depends on how you define China and who you define as Chinese. But yes, I mean, you're right. I look. I think there's a very positive potential outcome here, which is a multipolar world with a neutral reserve currency, with everyone playing to their respective strengths, and Ricardian free trade, amongst all countries. And so, if a country does something better, well, then they do it and they export it. But the trade balances all get settled out in a neutral reserve currency, so you don't run these imbalances. And in turn, if they stop being so mercantile, their people would live better. I mean, they've suppressed their wages and they've held their people back. I mean, those people have created a lot of wealth for the powerful people at the top. I mean, they deserve to share in it too. So,
What are your thoughts then, as on Russia and then the idea of BRICS through all this?
yeah, well, I mean, so the dollar is becoming weaker because we misbehaved and grabbed Russia's reserves. Russia's not, a great country politically, and I wouldn't want to live in Russia or be Russian, and Putin's not a good guy. Having said all of that, he's not an illogical guy, and he's not a stupid guy. And, I think that one can make an argument that, you know, um, he really just wants what's best for his people. I think this war on his part was pretty stupid, but you can also see the role that we played in aiding and abetting it because we broke all our promises with respect to how close we would get to him with our missiles and NATO expansion. So I think he just reached a point where he said, enough's enough, I'm going to push back. My sense is that there could be a negotiated peace there. There should be a negotiated peace there. But I think one of the things that I think happens here, Mike, is I think the U.S. military-industrial complex goes looking for dragons to slay. I mean, we wasted $8 trillion in the Middle East. We've demonized countries that don't necessarily deserve to be demonized. And, it's a tricky balance because you can't be naive. You can't think that other countries don't behave in their own self-interest. Of course they do. They all do. But you don't need to be overly heavy-handed about it either. And we should aim for the ideals that we stand for, which are kind of equality and fairness. And when the CIA has been out fomenting coups and doing extrajudicial killings overseas, that doesn't exactly help the U.S. brand, right?
What about from a standpoint of like Russia, Europe, Japan, China, as it in regards to tariffs? Where do you see that all coming into play? Because it appears that we're trying to break away from China and forcing these other countries to choose a side.
Yeah, we are, and I'm not sure that's right either. I mean, I think some of those countries might choose the wrong side. So I see. My view is this doesn't have to be an us and them, conflict. There's a middle way here, wherein we can push back firmly and stand our ground, but not try to foment a kinetic war. And I don't think we are trying to foment a kinetic war, but what I think did happen here is, this was a pretty clumsy attempt as an opening salvo, and that they could have thought this through better before they did it. And still made a big impact. Still said we're damn serious about this, but let's talk about it first, rather than us just kind of coming out and saying, it's out and out trade war. Because I think the impact of what they've done is going to be really bad for the economy.
Too late already. The from the impact.
Possibly. I mean, I don't know. I mean, there's some who think it is, there's some who think it is, and none of us really know. I mean, somebody posed that question to me the other day. What if he came back and just rolled back everything? Could we go back to where we were? And I don't think the answer, where we were with the bubble and growing and deflation and all that. No, I don't think we go all the way back to where we were. But I think it would mitigate some of the damage that I'm now worried about. I mean, I think in 90 days, if they really do put these tariffs in as talked about, it's going to be bad and get probably worse. If he were to flip flop on it, and I don't know if he will or not, because arguably it makes him look weak, or maybe he can say, I won things I want. We got the concession we needed, so we're not putting the tariffs in. And then maybe we do kind of muddle along, and it's not as apocalyptic or as doomy as I feel like it could be. But as you said, from your trade guy or your logistics guy, I mean, things don't look real great right now. I mean, this is not good.
Well, and also, the uh, from all the way down to the ground, the amount of jobs is going to impact, right? Truck.
Well, that's right. That's right. That's the piece that I think, it's the second and third order effects that I'm not sure, Besant and others have thought through. Okay, yeah, we had a bubble, we had to pop it, fine, but do you realize that that's going to increase the deficit? And yes, it's going to hurt the top, 10% that own all the stocks, and that doesn't necessarily hurt Main Street, but Main Street's going to feel it if the top stops spending and all the industry slows down, and therefore jobs started getting lost. Well, Main Street will notice that, and so, yeah, I mean, honestly, though, I think I said this earlier on, there really was almost no good way out of where we were. I mean, we were in a real mess. And in my view, the best way out would be a currency reset right here, right now, where we devalue the dollar, and we return to sound money. It would be very, very disruptive one time, very disruptive. But we would actually then have an even set of playing rules that everyone could understand and operate under. And I think we'd be surprised at how well things would get better. I think the problem is that the way government is structured in the United States, it tends to not do anything until there's a crisis. I mean, the change I'm describing is a radical change. And, arguing that we need that radical change without the crisis, I think that's a tough argument to make.
And the fact that people, if they were ever to come out and explain how bad this really is, that they never do that.
Well, no, that's right. Yeah, they don't want to admit how bad it is, but if it really is as bad as we think it is, it's going to show up eventually here. I mean, give ourselves another couple of months, and the data is going to start to reflect it very quickly.
Oh, you think it'll be that short of
Oh
order?
yeah, oh yeah. I mean, I think I told you. I mean, I think when the stock market, the S&P falls through 5,000, it'll be, when we take out the low, the April 7 low of 4,700, 4,800 on the stock market. I think, because right now, what kind of created this thing when he put the 90-day hold on the tariffs, the buy the dip crowd came in there. In fact, I tweeted something over the weekend. It showed that there was record purchases of 3x leverage triple Q ETFs, record purchases. So, the American public and the investing public has been trained to quote unquote buy the dip in the stock market. And so we had a very severe dip with all this tariff stuff. And then when he backed off on it, there was, oh, I get it. He's not going to do it. Let's go buy that dip. Well, might be the case that this is one of the times when buying the dip did not or will not make sense, because he hasn't backed off enough, and more importantly, confidence has really been shaken. And once it's shaken, it can take a while to come back. So I believe we're going to go much lower in the stock market this year, and that's not a good thing for the country, employment, everything. And then it'll put the Fed in the box, and the Fed will have to print money, which we know they'll do because that's better than a depression. But we'll still have an economic downturn, and it'll be combined with a high inflation rate, and that will be pretty unpleasant for a lot of people.
You mentioned too. I listened to one of your interviews with Adam Taggart, and you were talking about universal basic income, which is not the first time I've heard this. But there's the potential, if this goes to that level, where a UBI could be rolled out.
Very much so. I mean, I think that, you know, particularly depending upon who wins the next election. I mean, I think that, people, I mean, my sense is, let's say, we're 3 years away from it, but let's say, for example, that the economy does what I'm describing, and that, they're not really able to quote unquote fix it, and we have, high inflation and really poor growth or shrinkage. I think it's pretty clear that in spite of Trump's win this last time, the next time around, the other side will win. The blue team will win because the blue team will come in and they'll start promising people things. This has been horrible, and it's because they haven't spent enough money. It's because they're not supporting you enough, and we're going to put in UBI, and we're going to have Stephanie Kelton as the Treasury Secretary. We're going to take interest rates back to zero, and all these good things. And so, yeah, I could see all of that happening, and of course, that would just make the inflation even worse. And maybe that's what then leads to the complete demise of the monetary system, because I think the monetary system is in a lot of trouble. It really is. It's mathematically in a lot of trouble. And I think too few people fully understand that. They don't know what Stein's law is, and they don't understand how how this is baked in the cake, and it's really, really difficult to reverse it. I mean, people ask me, could you reverse it? Yeah, you could reverse it. You'd have to balance the budget. How would you balance the budget? Cut everybody's Social Security and Medicare in half. Okay, cut the defense expenses in half. That would balance the budget. Now, think it through. Given the boomer vote in this country and everything else, what do you think the odds are of that taking place? I mean, they're extremely low until the boomer demographic ages up and passes, and then probably the Gen Zs and the Xs and all the other gens are going to say, hey, you guys are getting too much. We're cutting you back. But right now you couldn't do that, right? So
This is what I've always I've thought for a long time, and 2008 for me was a wake up call when I realized that the whole fiat system is fake. It's just one big fugazi.
yep, that's right. Yeah, I was shocked when it happened. I couldn't believe it. 0% interest rate. I mean, in my book I talk about that. It's a tautology. I mean, you can't have money if money pays 0% interest, then money is worthless by definition. I mean, money is supposed to earn a yield. That's what it's. That's why it's money. And yeah, it shocked me, and I knew there would be bad repercussions from it, and I thought we'd go right to hyperinflation then and there. Of course, we didn't. I was wrong, very wrong. cost me a lot of money, it hurt me a lot. But, the underlying trend, I was right about that, we've now entered an inflationary money printing world. And, I remember the 70s, and it's very hard to get inflation back in the can once you start it. I mean, I'll give you an example that I think is a really important example. Labor, so the money supply grew 40%. And so the price of all our groceries went up 40%. We all notice that when we go to shop. So labor, if they were earning a fixed hourly wage, suddenly they had 40% less purchasing power, and they noticed it. And take the longshoremen, which is a very powerful union, the people who load and unload the ships. They just cut a deal in October of last year where they got a 60% bump, or 10, no, um, a 6 year, 10% bump. Yeah, 60% bump over 6 years. So over the next 6 years, their wages are going to go up 10% a year, guaranteed, locked in. Now, how does that compare to what the Fed wants, which is a 2% inflation rate? It doesn't. And other people in the labor markets have done the same kinds of things. They're, all laborers are saying, hey, we're getting screwed here. We need higher wages. And so they've been able to cut higher deals. And of course, that's fine. All those things will get unloaded in the ports. But guess what? That extra cost will get passed along to everybody. So the point is that it's going to be very hard to slow inflation down in this environment.
Well, and I don't know that there's anybody in there that's going to do what really needs to be done, to your point of what you've been talking about for 45 minutes now. I just don't see it.
I don't either, but I'm prepared to be surprised in a good way. I hope Basant is really, really smart, and I hope they're thinking 3 moves ahead, and he's got a plan for how to get us back to sound money. I mean, he talked about wanting to be at the table when it happened. Well, he would be, in my view, he would be an enormous hero if he took the step to take us back to sound money. Just enormous. It would save the country. Not that we're going to fail as a country, otherwise we're going to go through a lot more pain if we don't. The sooner we do it, the better it's going to be. The longer it takes, the more painful it'll be.
What is your estimation of how long this will take, and then we'll shift over to solutions?
Yeah. So it's very, very hard. It depends on a lot of things you and I can't predict or know. I think I told you earlier that the fourth turning model at 30 years is kind of the longest. That would put us at 2038. I think it'll be resolved before then. I mean, I kind of think that we're going to have this administration is going to have inflation, and it's going to have a punk economy, and but the dollar will still be around, and gold and Bitcoin will do well, but the dollar's not going to collapse, and everything will be going along okay. Just high inflation. Like that'll lead to the blue side will win the next election because everyone will be so fed up with the inflation, and the blue side will be promising UBI and a lot of other things. And I don't think they're going to hold back. I mean, I do think they'll make Stephanie Kelton, who's the MMT woman, Treasury Secretary, and they're going to run deficits and print like crazy and send everybody checks and the whole 9 yards. And that's going to create hyperinflation. And at that point, the currency will fail. So 3 years from now is the next election, what, 2028? And so they do that. So, sometime in the 2030 to 2032 cycle, the currency fails completely, becomes worthless. And we revert to one form or another of sound money, either the gold standard or Bitcoin. That's kind of my baseline projection. But, what do I know? I could be very wrong. I just don't know. I mean, there are many people who say they'll get it back under control and kick the can. And I mean, to be honest and be fair, I've misunderestimated their ability to do that. I mean, when Silicon Valley Bank blew up, I thought, all right, this is it. Here we go. We're going to have a really serious banking crisis. It's going to be like COVID and so forth. And nope. And they put it back in the can. Everything was okay. So
That's the one thing about these people. They are very creative. I thought after 2008, not that I'm an expert or an analyst or anything, but, I was working in retail banking, and you started to see things because we were doing a lot of home equity lines at that point. And, in Arizona, that was a hot spot, right? You had, this is like the Big Short in the Southwest over here.
Sure. Yeah, well, interest rates were very low. Yeah. And you can do HELOCs. I mean, I remember all the HELOCs from 09 to 15. Your HELOCs cost you almost nothing. Yeah.
And even after the settlements that were involved in that, I mean, people didn't suffer. Yeah, okay, they took a little hit on their credit for 3 to 5 years. So what?
Yeah.
And then it got completely restored, and here we are.
Yeah, here we are, and they just blew another bigger bubble. Yeah, and by the way, that could happen again. I mean, they're gonna, people ask me what's gonna happen specifically. I don't know. They're gonna make up new names for it. It's gonna be printing money. Effectively, it's gonna be printing money. They'll call it something else. They'll do it through the banks. I mean, right now they're doing it with the hedge funds and the basis trade. The hedge funds are able to borrow money cheaply, lever it up, use it to buy, treasury bonds. I mean, the biggest tell in all of this, the thing I watch like a hawk, and the thing the Fed watches like a hawk, is the bond market. If they, and this is why Trump pivoted on the tariffs and went to 90 days when the bond market blew up. So when the bond market went from, the low fours, well, actually at one point after the initial tariff thing, it went down to 3.839, and it went back up to 4.5 in a hurry, and it looked like it was going to continue. And I think, there was a lot of stress. This thing called the move indicator, which shows bond market stress, was at really high levels. And I think at that point in time, Besant went to Trump and said, dude, and we can't do this. You got to put this on hold or we're going to lose the bond market. They lose the bond market. What that means is interest rates, people sell bonds, interest rates go up, get very, very high. When you've got $37 billion of debt and your interest costs are going up, you run the risk that your deficit becomes just, incredibly out of control. And so you cannot have higher interest rates. So, and the way you prevent that is you do what they did in '08, which is called quantitative easing, which is to say the Fed issues reserves to the banks, basically mouse click money that they print, and says, hey, bank, buy that bond. Create a bid for it so that the rate doesn't go any higher. And if that gets far enough along and gets out of control, and everyone realizes the Fed's doing that and that the money printing can never stop, the entire bond market might say to the Fed, sold to you. Now, the U.S. Treasury bond market is a $37 trillion market. The Fed balance sheet is $6.75 trillion. If the Fed had to absorb all that, if all the bondholders said, we don't want to hold this anymore, we're selling it to you, give us the paper, I mean, that would be an enormous growth in the money supply, enormously inflationary. So the point I'm trying to make here, Michael, is just all roads, with the math the way it is and the system the way it is, all roads lead to inflation. I've never seen a higher probability outcome in the investing world. And therefore, when you look at gold, which will benefit from the debasement and inflation, or Bitcoin, which has a twofer, it benefits from debasement and inflation, but it also benefits from an adoption curve. We're still early in the adoption cycle. The upside is quite substantial for both of these things.
How long before you think Powell will have to move and start dropping rates?
Yeah, it all depends on the markets. I mean, I think the question is just how long until something breaks. And I think we're on the edge of something breaking. I mean, the Treasury General Account, which is the bank account for the Treasury, is down to a couple $100 billion. We've seen he already did something. I mean, the last Fed meeting, he took the quantitative tightening rate from 25 billion a month to 5. I mean, he might as well have taken it to 0. So that's kind of, because he's no longer tightening, that's effectively a little bit of loosening. They've been talking about issuing swap lines to the hedge funds that have been buying the bonds. So swap lines are nothing more than printing money and giving it to the hedge funds. I think it'll probably happen in the next 6 months, because I think what will happen is the stock market will continue to go down. That will, create a reverse wealth effect. People will be selling what they can, not what they want to sell. One of the things that'll get sold is bonds. Rates will go higher. That'll push interest rates higher. And effectively, there's just not enough money in the system, and the Fed will have to turn on a dime and say, well, inflation is not quite where we want it to be, but we view the risk of the downside of the economy and the risks of unemployment to be larger risks. And therefore, we're going to go back to QE and or cut rates. It's one thing I will say. In the past, Jeff Gundlach made this point. It's a good point. In the past, what they did was they would take interest rates down to 0. And then if that wasn't enough, then they do the quantitative easing. They start buying the bonds, okay? Gundlach made the point that maybe because the inflation's a little hot, this time around what they'll do is they won't actually take the interest rates to 0, but they will start buying the bonds. Realizing that going to 0 creates a carry trade and speculation. They don't want to do that. They realize what happened with that last time. But what they will realize is that if they don't buy those bonds, those interest rates are going higher, so they'll go back at the bonds. They'll start buying them again. So I could see, I mean, to answer your question, Mike, I think within 6 months this will happen. I mean, If I'm really, really wrong, maybe a year, year and a half, but I don't think it's going to take that long.
So, what do you say to people, Larry? I imagine you get many messages inundated with, "What should I do? What should I do? What should I do?"
Yeah. Well, I say it in the book, and I just say it in general. I mean, I think, look, everyone wants to have their financial house in order as much as possible, have savings, not be over indebted. To the degree you have debt, try and have low cost debt. I mean, obviously, all the people who refinance their houses at 3% are feeling good about that right now, and I would say stay with that. In the book, what I say is, if it's my belief, and this isn't advice for everyone has a different situation, so this is not advice for anybody in their situation. It's just kind of generic advice. And I am an RIA, so I'm allowed to say this publicly. Generically, I feel like if people don't have, 25 to 40% of their assets in something the government can't print in the next 5 to 10 years, they will experience regret because I think those will be the best performing assets. Let me just list them: gold, silver, Bitcoin, and real estate housing. I mean, and housing is probably the worst of them all because it has tax, the property taxes and costs of maintenance, all that stuff. But still, government can't print houses. And so if there's large monetary debasement, the value of the house will go up in monetary terms. I think people in bonds will be treated the worst. I think anyone who owns a 10, 20, 30-year bond will get a fraction of the purchasing power back that they've loaned out. And I think stocks will be kind of a mixed bag. I mean, some will work, some won't. Stocks are pretty expensive right now. The only area where I see stocks being cheap are the commodity stocks, the gold and silver mining stocks. And I run a fund that focuses on those. So I should add, my partner runs a fund that focuses on Bitcoin. And his name is David Full, and his partner is James Lavish. It's done extremely well, very smart. They've got Bitcoin, but they've got Bitcoin related things as well that capitalize on that trend. And they are raising money right now for $200,000 minimum accredited investor. You should reach out to the Bitcoin Opportunity Fund. So, but everybody has to make their own bets, Mike. But I think a lot of people are kind of all in on stocks and kind of look at gold and Bitcoin and think, why do I need that? And real estate. A lot of people get real estate, and that's okay. Real estate will work. But I think if you don't have any gold, you don't have any Bitcoin, I think you really need to study those two things as protective assets to hold in a highly inflationary world. And what I think the next 10 years will be highly inflationary.
Yeah, I've had James on here in the past, and yeah, I think one of the challenges too, and you tell me you agree or disagree. People don't want to adapt to the time, change with the times, and they think that I mean, I feel like that some of the boomer generation, not everybody, but they think that the system, it'll just revert back. It was a good time.
Well,
Now we're in a bad time, and then it'll all work itself out.
well, and exactly, and it's very understandable how that's happened, because really for 40 years we've had a deflationary trend, and buying the dip has worked. I mean, now you had to be willing to have some real big downs. I mean, in the dot-com bubble burst, the stock market went down almost 50%. When '08 happened, that went down almost 50%. But if you'd bought at those lows, 5, 6, 7, 8 years later, you'd have felt really good. 2020, we had a 30% dip, but you bought that low and it came right back. So people have been trained to buy these dips. What they're not looking at is that this is a once in 100-year event. This is a sovereign debt crisis. The last set of crises that happened like this is back in the teens and the 20s and the 30s, when we kind of had the same crisis, but it was off the gold standard. And basically it's coming around again. And so, they say it's not different this time, but it is different this time. It all depends on your time scale. But it's a very logical thing, yeah, for people to think, well, hey, for 40 years it's worked. Yeah, this is a little bit painful, but I should buy it and it's going to work again. And I said, no, it's not. I mean, it is going to work again if you can wait 30 years, but 30 years is a long time. I mean, there have been periods of time. If you bought in the peak in 1929, you didn't recover that level until like 1958. So I don't know what 58 from 29 is, but it's
Just shy of 30 years.
Yeah, it's just a substantial period of years, right? So, and this bubble by several measures is actually more expensive than the 29 market. So I don't see the stock market as being a good place to be. But that doesn't mean, don't sell all your stocks. If you have ones you like and you want to have some of your money, great, fine, do it. But again, diversity I think will be your friend. That's the other thing I would say. On all of these things, you never want to go from 0 to 100 or 100 to 0. I mean, none of us know the future for sure. It's all a probability weighted bet, but having some diversity. I mean, if I'm right and stocks don't do well and you have gold and Bitcoin and they do very well, you're going to feel a lot better than if you had all your money in stocks. You know what I mean? And if I'm wrong and stocks do pretty well and gold and Bitcoin don't do well, you got the stocks that did well and you didn't do as well on gold and Bitcoin. I mean, there's a beauty to being diversified across a couple of different ideas.
Well, and the other thing that I noticed you and Adam were talking about was the idea if you own gold and you own Bitcoin, you're going to experience some ups and downs with it, but you're looking at this from a long-term standpoint.
Oh yeah, that's extremely important. And you're right. We didn't make that point earlier in our conversation. Buying Bitcoin, this thing goes down 50% every now and then. So, and a lot of people don't like that. And fine, if you don't like that and you want monetary debasement insurance, buy gold. It doesn't go down 50%. Worst down year is like 20%. But with respect to Bitcoin, yes, you have to have a 5 to 10 to 15-year view. This has to be your long-term core savings. I mean, anyone who's held it for 4 years has always recovered from a drawdown. But I always caution people, they say, how much should I put in Bitcoin? I say, how much would you be willing to have it go down 50% and you wouldn't panic? And you'd say to yourself, oh, this is a good opportunity to buy some, or I'm not going to sell what I have. I know it'll come back. That's the level you want to be at. You want to be at a level where you know that if it has a normal correction, you're going to be okay. And it's interesting. I mean, and people say, well, why should I go through those corrections? Well, because of the upside, because it can go up 10x. So if it can go down 50%, but it can go up 10x, you want to do it. A good comparable, Amazon's been the best performing stock in history, really. It's up 210,000% since inception. But it had continual pullbacks of 50% all the way through. One of them was 90%. Oh, 08, Amazon went down 90%, peak to trough. And yet it was a good business. It kept growing. And so, and that's the case with Bitcoin. It's a network, it's a monetary network that is growing and will continue to grow, in my opinion. Got 16 years of evidence of that. I don't see anything that's going to change that. And so, yeah, will there be times when it's out of favor and it goes down 30, 40%? Sure, there will be. There have been. But, my view is those are good times to buy, or at a minimum, you just don't sell and you wait because on the next upturn, it'll go higher than it did the last time. And that's been the pattern recurring now for 16 years.
And you feel the same about gold, the potential for it to. Do
I
you
do.
see gold crashing?
No, 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 no. I don't see gold crashing at all. I mean, um, look, I think over time, Bitcoin will steal some of gold's thunder, and that's got to be taken into account. But gold has been money for 6,000 years, and 8 billion people know that gold is money, and so it's not going to get demonetized overnight. It's just going to lose ground compared to Bitcoin. Bitcoin's going to perform better than gold. But no, I think we'll be on some kind of a gold Bitcoin combo standard for money, for the next 50 years, because they're the only two forms of money that really can't be printed. I mean, gold can kind of be printed because we mine 1.7% of the supply. But Bitcoin, we're down to like 1% left, and that asymptotically is approaching zero in the year 2140. So, yeah, it's Bitcoin is the soundest form of money ever invented, which is, by the way, why I think it's going to win. So, and look, all this is in the book. I mean, I'm not saying anything that the book doesn't talk about. And I would also like to emphasize, this is not a textbook. I wrote this as an easy to understand guide for what's gone wrong and how to think about it and how to fix it. I really tried. I tested it on a lot of people without financial backgrounds, the kind of people that don't want to read finance books, people that like to read stories or just general history. And I had to revise it a lot as a result of that. People say, oh, this is too confusing. You got to say this in a different way. So I tried to make it very much an easily accessible book that's kind of fun to read and explains what's going on, explains what's happening in the monetary system, and explains how to protect yourself on a go-forward basis.
Where do you think copper? What's your view on copper and all this?
Yeah, so it's really important. I mean, it's the most important industrial metal. It's used in absolutely everything. We're getting more, we have more need for power and therefore more need for copper. And, I'm very bullish on copper long term because it's an essential commodity. But it's not something I follow. It's not a monetary metal. It's a commodity. It's a commodity that gets used in construction and data centers. And therefore, it's not something I invest in or something I know a ton about. But yeah, it's in general, I think the price of it will be going up just as. That's the other thing. If you read the book, you'll see there's a great chart in that shows kind of when commodities are expensive, stocks are cheap, and when stocks are expensive, commodities are cheap. And we're at one of those periods right now where commodities are actually quite cheap and stocks are actually quite expensive. And they have these cycles. They cycle back and forth between the two extremes on both of those things. And commodities are quite cheap, and therefore copper is actually, in my view, quite cheap today. And it is probably a pretty good investment, but it's not something I study and focus on. I mean, it's a different kind of mining. It's really, really large scale mining. Copper mines cost billions and billions of dollars to build, and so it's not the kind of mining that I'm familiar with.
You know, my last question in regards to what we've discussed over the last hour,
Yeah.
how, where does this compare? As I mean, we're not through it yet. We're not on the other side, but where does this compare with 29? Where does this compare with getting back on the gold standard, or getting off the gold standard, the GFC, in terms of the level of how bad this could get?
Yeah, I mean, you're not going to like the answer. Even I don't like the answer, but looking at it analytically, I think this is going to be worse than the GFC because it's at the currency level, at the nation state level. The GFC was at the housing and bank level, and they just printed enough money to solve it. So it's a bigger issue. It's a bigger bubble. And when solving it is going to, in my opinion, ruin confidence in the governments and the fiat currency, and that's going to be a very bad thing. The other thing related to that is that, it's kind of like 1929 in that the stock bubble is as big as the bubble in 1929. And peak to trough, that went down 82% and led to the Great Depression. So I'm not suggesting that's what's going to happen here. But sadly, Mike, I think it's going to be pretty bad. This is not, I mean, if you look at it just, clearly and analytically, we are not in a very good situation right here. And, I don't want to scare people. I don't want to be negative. I don't want to be a doomster. I'm just trying to kind of read the facts as I see them, and I recognize them for what they are, and realize that this is not good stuff. There's better stuff ahead. We'll get through this, and hopefully my 20-year-old kids will have a much better world, and my grandkids will have a much better world. And like any other fourth turning, this problem is serious. We got to address it. We got to solve it. We solve it, things will get good again. But from here to things getting good again, I mean, in my opinion, the next 5 or 6 years are not going to be simple. I mean, they could be if our government people were geniuses, but we know they're not. So, we're going to have to we're dealing with some issues that are pretty serious, in my opinion.
And we didn't even touch on AI and how that might factor into some of
Well,
this.
yeah, and that's actually a big positive. I mean, look, the one thing that saves us is productivity growth. I mean, productivity growth is a great thing because we get more for less, and that's what, capital well deployed gives you. And AI is going to provide productivity growth. It reminds me a little bit of the internet now, though. I think it's a little overhyped right now. It's going to change the world. It's very, very important. But, we can't make a baby, in we got to wait 9 months. You don't have a 1 month gestation. You get 9 babies. I mean, it's just like it's going to take some time here for the AI productivity stuff to kick in. And meanwhile, this monetary stuff is coming at us really quickly. So,
Well, and also too, you see all this money that's being poured into these AI projects, and yet tomorrow the whole formula could change, and then all that money that was pumped in was completely wasted.
well, absolutely. And there's no doubt that some of this is malinvestment and misdirected. I mean, it reminds me so much. I'll never forget back in 2000 when it was the fear was we could never build enough fiber capacity to handle the packet demand that was going to be created by the internet. And so there were these companies like WorldCom and I don't know, a few other fiber companies that they were laying fiber like madmen, spending billions and billions and billions of dollars because of the great fear that the internet would continue its growth rate that it had had, and therefore that the packets we just wouldn't have enough capacity, right? And of course, 4 years later, we had an enormous capacity glut, right? And that's, you see the same thing with this AI. Oh, we don't have enough data centers. We don't have enough computing power. We don't have enough capacity. We need to spend billions and billions and billions of capex on this. And I'm kind of like, okay, I've seen this before. It appears to me like they're probably a little overexcited. So,
Where can people find you, Larry?
So, well, someday maybe you'll be able to find me again on Twitter. I used to be on Twitter at Lawrence Lepard. They've now decided I'm a suspicious actor, so I'm shut out. Hopefully that won't last forever. But I'm also, I do a lot of podcasts. You can always hit YouTube and you'll see me there. I'm going to the Las Vegas show. I'm going to the Prague show. I'm happy to sign books at either of those. And I have a website called Equity Management Associates. The ticker is, the URL is ema2.com. Free newsletters, macro newsletters there. You can sign up for them. And I don't know, that's about it. If you Google Bitcoin Opportunity Fund, you'll see what my partners are doing over there. It's really cool stuff. And yeah, like I said, hopefully I'll get back on Twitter. I'm also on Nostr. Nostr is my Twitter backup, which I really enjoy. So I don't know, it's pretty small. Not many people are there yet, but I highly recommend it. It's Nostr. I use the Primal app to access Nostr. Download Primal app from your iPhone and get yourself a Nostr address. I'm on there, and they haven't shut me down. They can't really.
And then I know you mentioned earlier. Tell people again where they could find the book.
Oh yeah, so the book right now is on Amazon. Just Google the big print, Lawrence Lepard. It's I'm in four formats: hard copy, paperback, EPUB, which works with Kindle, and then audiobook, which is read by Walker America. So that's a good. A lot of people like to listen to it by audio. It's doing pretty well. I mean, I'd like it to do better. I want to get out of just the sound money crowd, and I really want every American to be aware of this stuff because it's critical to our future that we solve this monetary thing, in my opinion.
Have you already thought about the next book?
No, to be frank with you, I have not. I don't think there'll be a next book. I think I tortured my wife too much by writing this book. She used the term I'd never heard before. She called herself a book widow during the 6 months when I wrote this book because I was just heads down, determined to get it out. And everything just came together. I felt like I had something important to say. I knew what I wanted to say. I knew how I wanted to say it, and I wanted to get it. I wanted to get it out before it happened. And so it took me about 6, 7 months to write it. Finished at the end of December. We cleaned it up during January for printing, and it came out in February. So it's still relatively fresh. I'm hoping to get wide distribution because I think the message will help people protect themselves in what I view to be as a pretty stormy economic climate, sadly, but it just is what it is.
Larry, I appreciate you doing this. I look forward to continuing to follow your work and love to have you back on.
Anytime, Mike. I appreciate your questions. Very well thought out, and happy to talk to you anytime.
Mic drop.